back, Maverick traders, to your currency midweek for January 18th. Corey here with you. As always, we like to start these with a quick reminder that everything we go through is intended to give you more education, show you how we assess the markets, but you need to be trading your own trading plans. And as you go throughout the Maverick educational process, we try to put each step in place so that you can create your own trading plan and really think about all of these things ahead of time so you're not emotional and making reactionary decisions. It's all kind of, hey, this is the way I approach this. This is how I go about it. So with that, let's jump into a couple of things here in the markets. Not a lot has changed the past couple of weeks in terms of my outlook. And so on a week-to-week basis, I mean, we try to add new insights, but sometimes the market's just kind of status quo, and that's where we're at. We're in a bear market, but I've been bullish the past couple of weeks. I think we go up above the downtrend line before this thing's all said and done. I think that would be the kind of the max pain point, and I do think we're going to do that. We've responded. We're kind of falling away from there right now today, but I think we should start to go up and through that trend line. Probably next week is most likely when that's to occur. US dollar is in a downtrend. It's broken the key 104 level on the dollar index. The Dixie is something that every FX trader is kind of aware of. Where is the US dollar in terms of its key levels? And once you broke that level and it really gave way, you know, it's been more downward trending and just continuing to trade poorly. What a difference a year makes as we've kind of flipped into 2023. Last year, the US dollar was the strongest. This year, acting the poorest. And sometimes that's what can happen from one calendar year to the next. Last year in 2022, the yen was one of the weakest. Personally, I think the yen will be one of the strongest in 2023. So last night, the Bank of Japan actually came out and they were more dovish. They basically were, you know, the markets were kind of thinking, okay, how aggressive are they going to be in terms of, are they going to start hiking rates? Are they nervous about inflation? It is true that Japan has less of an inflation issue than most of the rest of the world. They're not seeing it. They've been fighting deflation for so long that the signs of inflation are almost kind of a welcome thing. But they have had to back off if they keep their rates down at zero essentially, and the rest of the world is up here, like the US at 4.5 and so on. It's just unsustainable. It costs them too much money. It's just not sustainable, and so they've had to relent a little bit and allow rates to rise. Yesterday or last night, they were sort of dovish in their messaging, but you'll notice the yen spiked down, and what immediately happened? People bought it up. If you look at all the yen pairs, they basically, because the yen is listed last, they all gapped up, right? That's the yen selling off, and then they went right back down immediately, meaning as the yen sold off, the knee-jerk reaction was this big dovish message, and the yen fell, but there were buyers there. And that's kind of the thing that's going to happen, I think, throughout this year. Is it's not going to be a perfect, it's going to be tough because a lot of it's going to be news related. A lot of it's going to be on the Bank of Japan and on these little messages, and whether the market sees them as being dovish or hawkish. Are they going to allow interest rates to rise and so on? You're going to see the yen fall, but buyers will be there. That's my thought. That's my belief. That's kind of my thesis for the year, just as we saw last night. Expect that to be more of what happens all throughout this year. So when I see the yen selling off dramatically, I mean, it initially fell a couple of percent. It was a big move, and it's already recovered, you know, 1.5%, almost all of that across most of the pairs. Economic reports, CAD, CPI came in as expected, but notice this trend, negative 0.6. In the US, PPI, 0.1. In the US, retail sales disappointed at negative 1.1 versus the negative 0.8 expected. Now, as we look at this dynamic, I pulled up a chart of the CPI, and this is the monthly CPI for the US. And this is what we're seeing. So think about Canada. They just printed a negative 0.6. In the US, last week we had CPI, and you see how it came in negative 0.1. Look at the last 5 to 6 months here. In fact, the last 6 months really have all been at pretty low numbers. If you take the last 6 months and you annualize it, it comes out to about 2% inflation, which surprisingly enough is the Fed's target, right? So we're on a trend, we're on a current path towards 2% inflation. Now, how does that happen? You keep putting in monthly numbers that are down here, and you get rid of these huge numbers from the past, and your average will go down, right? The annual average right now is still at 6.5% here in the US, but that's because if you go to months 7, 8, 9, 10, 11, and 12, you go to this 6-month period, those are all sky high. I mean, here's a 1.4% inflation number. Here's a 1.3% inflation number. Here's a 1% monthly inflation increase. What's going to happen is you're going to keep dropping. Notice we're adding low numbers. We're getting rid of high numbers. That's why the annualized number is coming down. Now, the question is, are we headed towards this? I don't think we're just going right back to 2%. We are going to drop off some of these numbers, but I think you're still going to be around 4-ish, maybe 3 point something, somewhere in that. I think inflation's going to stay a little sticky. This has been my operating thesis for some time, that I think we're still going to put in some numbers here in the coming months that are like 0.4, 0.3. I think some things are going to bounce back, so we're not going to keep printing negative numbers, in other words. But as you get towards 4%, it's one of those situations where the Fed will still have higher inflation than their mandate, and the risks will turn. So right now we're in a little bit of a sweet spot because it's trending down, and the markets are saying, hey, this is a good thing. All the data is coming in really positive right now. And that's been part of my thesis for why we should be kind of in a risk-on mode for a few weeks. And look, it's working. The S&P in the last couple of weeks is up 5, 6, 7% off of its lows, and it's right back up to its downtrend line. It very well may break through, because I think the next little while, I think the Fed is probably going to hike rates by 25 basis points instead of the 50 basis points. Instead of 0.5%, they'll go 0.25% increase, I think, in early February at the next Fed meeting. Some of the things that are happening are actually good in the short term, and that's why we're getting this relief. The problems are going to come in the back half, and that's why I think stocks are going to suffer. I think, it's going to be a rough couple of years for kind of equities and risk taking, and it's going to be a difficult spot. And that's because we still have a lot of things to deal with, but there's always this kind of ebb and flow. That's the beauty of trading, is right now it's bullish in a downward market. That's a tradable opportunity. It is going to flip back to bearish in my estimation, and it's going to get ugly later this year, because I think we're in a couple of year process of kind of working from huge QE, record-breaking, trillions of dollars printed, to quantitative tightening. And this, the markets are actually pricing in the Fed to be cutting rates later this year. Now think about that for a second. They think that the Fed's going to hike rates early and then be cutting rates in November, December, that end of year period. Why would the markets expect the Fed to be cutting rates later this year? The only way you can kind of justify that is if there's a huge downturn in the economy, right? We hit a recession, economic slowdown, a lot of bad things kind of happening. Hopefully, inflation's not a risk. But what if you hit a recession and inflation's still at 4% or something? Now all of a sudden you've got a real cocktail of issues because you've got a slowdown, but you've got too high of inflation. Now, can they cut rates and so on? We would have to see inflation come back towards their levels before they're going to cut. So, is the Fed going to cut rates later this year if the economy's holding in? If we don't have a recession and the economy and the markets are doing fine, the Fed's not going to cut rates. They'll kind of keep them where they are at 5%, 4.5%, those types of levels. Well, they're going to be at 5% because we're going to have a couple more rate hikes right now, and they're at 4.5. So I kind of look at this as the markets had it backwards. So many people thought that we were going to have a rough start to the year and then it would get ugly. I think it's kind of the opposite. That's been my thesis, is we're actually in a little bit of a sweet spot because of this downtrending inflation, but the recession and those risks come later this year. And I do think, look, we're probably going to go into a recession. I don't know that it's going to be massive and deep. I would kind of expect it not to be. But I think the best analogy for what we're going through is kind of, we got addicted to drugs. Quantitative easing is stimulus. It's steroids, and we got addicted to it. And now we got to figure out how to hit the baseball without using steroids. And it's taken away some of the power, and it's going to create some frustrations. And there's going to be, that's kind of where we're at in this scenario. We cheated for a while. We pumped up on steroids and we hit a bunch of home runs. Well, we did a bunch of stupid stuff as well. While they were printing trillions of dollars, $3-4 trillion just in the past couple of years, we used a lot of that money to buy all sorts of stuff. And so I think it's kind of the third major bubble that I've seen. In 2000s, we lived through the tech bubble, and in '07 we had the global financial crisis spurred on by real estate and interest only loans and no documented loan, where you could just go and take out a loan and you didn't have to prove anything. It was just like, hey, we'll just give you money. What the heck? And then, really fueled by 2020 and COVID, they printed mass amounts of money, sent out checks, all those sorts of things. And I'd call it the crypto NFT. That was kind of the mass stupidity area where people were paying, millions of dollars for a monkey NFT or whatever. And so, as you look at each of these three, what they all have in common, as we always say, is envy. Envy is probably the most powerful emotion to drive assets. And when you can spot that there is envy, aka greed, but envy is other people making money and you don't like seeing them make money without you, right? You don't want your neighbor to make money off of tech stocks and he's buying a brand new boat, and your kids are saying, well, why can't we get a boat, And envy will drive you to do stupid things. In the mid 2000s, when everybody was getting into real estate, buying their fifth and seventh and 12th property, and taking out their real estate license and so on, because everyone was making so much money. Or crypto, the get rich quick, they created Dogecoin, which was meant to be a joke, right? It was making fun of the movement, and yet Dogecoin exploded and made instant overnight millionaires, and people don't like to hear those stories and not be participating. Envy is a powerful thing. By the way, you can make a ton of money on the way up. You just better be out before all hell breaks loose, right? And don't get sucked into the dogma of it. The dogma of, well, everything else sucks and tech stocks are the way of the future. Well, the NASDAQ lost 85% of its value. Hey, only invest in real estate. Home prices always go up. They don't ever go down. The dogma of it. Oh, crypto, have fun staying poor is one of their terms that they would tell people that weren't invested in crypto. Hey, have fun staying poor. The dogma of it, that if you're not in this, you're somehow dumb, stupid, and naive and you're going to stay poor while everyone else is getting rich. That's the envy of it. And every one of these, well, the prior two bubbles had more room to go. I'm fearful that this third, it'll be the same script. That my guess is we won't hit the bottom in equities until there's real, you could almost feel the pain that's in the market, just the absolute chaos and catastrophe. The VIX, the volatility index, will be at 50, whatever. That's kind of how these bubbles tend to form, and that's kind of where I think we're at. So as we look at asset prices for this week, kind of struggling, right? Everything down, oil up a bit. The reason we're rolling over, you'll be able to see on the chart here in a minute, but as we kind of look at the weekly performance, you'll notice that all of these are kind of in a little bit of a risk on, even though today's ugly. All of the sell-off for this week is just happening today, right? We were up for the week before today, now we're down. But look at the last couple of weeks. We've rallied about 6% or so off of those lows. We've run right into the downtrend line. Now, I think you back and feel here a little bit, but I do suspect we break through. I always say that you want to paint a picture. What is it you anticipate? How do you think it'll trade? I think we break through, and what I would love to see is a ramp higher and some form of big exhaustion signal up here. Do I think the markets are just up and away? New all-time highs, everything's fine? No, as we've just talked about, that's certainly not my thesis. But if you get the breakout, this will create max pain. There's just so many people bearish. You can see it today. They're trying to defend this level. They're trying to basically defend this trend line and not have their stop losses hit and so on. And I just don't think it's going to work. I think we come up here, we trigger the stops, there's a short covering rally and so on. And within a couple of weeks, you'll probably have some sort of blow off top. What'll that look like? Well, it should be a big expanded range candle that's up in the air, probably volume increases. It'll feel like, that the market, that the trend is going to go up forever. It'll feel bullish. It'll feel like we've hit our bottom and the bear market is done, that sort of thing. And I don't think that's the way it is. What I think, and remember, we've talked about this a lot in these midweeks, I think we've made 5 big waves to the downside as per Elliott wave theory. I think we now have gone through the A and the B, and we're currently in the C. And once the C is kind of finished, and if it puts a big exclamation point at the end of this with a big exhaustion, bullish ramp higher, big bullish day, I will flip and I will be bearish, make no mistake, and I will feel quite confident that the market's then going to have back and fill and quite probably come down and take out these lows by the end of this year. I talked about this. Look, we started the year at the highs in 2022. The odds that we would just start the year at the highs in 2023 and trade down all year long, the odds of that are very low. So since I think we're going to have a rough end of the year, I really thought we would rally first, right, and be up for a while and then give all those gains back and then turn negative. And that's still my thesis. So I would expect that this little sell-off today, it's not great looking, by the way. It's kind of an expanded range bearish candle. It should start to rally off the lows a little bit by the end of the day. I think it's just, again, it's them trying to defend their spot, but I don't think it's going to work. I think we're going that way. So that's been my thesis. That's been my thesis back here, is really where I turned bullish and said, you know what? I think this is the spot where we're going to have, the B. That basically you've hit your B pattern. And by the way, this was a 50% retracement of this advance. So if you're a fib guy, that was a 50% retracement. kind of where an ABC pattern should bottom, and so far so good on that expectation. Now, that does mean, however, it means ugliness later this year if you kind of follow my thesis all the way through. So there's only a little bit more upside. It's not a great risk to reward. There's only a little bit more upside in essence for quite a lot of downside. You know, maybe there's 4 or 5% more up in the S&P. There's probably, uh, heck, I don't know, at least 15%, 20, 25% down. So it's kind of a little bit up, but a lot down when it's all said and done. Japanese yen having a rough week on the Bank of Japan. The CAD having kind of a rough week. Swiss franc up. Pound up. Kiwi up. Now, I don't know if any of that is correlated to anything. This was the Bank of Japan news. You know, maybe there's reasoning for each one, like we talked about in the CAD circumstance. They had a really low negative 0.6% inflation. You know, some of this is data related, but I wouldn't call this a risk on or a risk off. It's just kind of an everywhere week thus far in FX. So no real, strong indications that way. Now, as far as crypto, a rough week this week. Bitcoin flat, everything else down, but crypto's been on a nice bounce back. As I've said, give credit where credit's due. Crypto's rallying. Now, I don't trust it personally. I don't think it's, Bitcoin's going to 60,000 or anything like that. I think it'll ultimately be a sucker's rally, but you can't really short it or do anything that way while it's, in this recovery phase. So let's look at a few charts here. If we just look at the markets without kind of our opinion necessarily, you'd still have to say, hey, we're above the shorter term moving averages. They're kind of sloping sideways, but we're kind of above them in the short term. So we're a little more bullish than bearish just from that standpoint. And maybe it's a little, head and shoulders bottoming point, something to that effect. You can really draw a trend line this way as well. And the argument could be had that we could break either way. I mean, that's kind of technicals. Maybe I was right that we were going to rally, but wrong about magnitude, right? What if we fail here and we just come back and break the trend line? That's possible, right? So I got the first part right, but maybe not the second part. Maybe we do just fail here. I don't think so. Again, I think this is just an easy kind of max pain. I think the market's going to punch through, and it's going to inflict some pain because a lot of people are short, a lot of people are bearish. Put to call ratios are just sky high and so on. It's just one of those things that I think will transpire, but there's no guarantees. Just because I think it should, would, could, well, what would we put the odds at? Well, I'd kind of give it a 70% probability. That still means that a couple of times out of 10, it's not going to work, right? Now, as we look at a couple of these other, coming back here, a couple of these other charts to come back to. Let's go to the Bitcoin chart. So here you can see what we've talked about in terms of, hey, give credit where credit's due. It's rallying. It spent a lot of time just consolidating. Had this big low in November. That was the Sam Bankman-Fried fraud, all of that. And isn't it interesting? There's something to be said. This is something that I always try to teach, is news versus price action. This is something that you all need to be aware of in every circumstance, because the general public says, well, this is good news, this is bad news, this is whatever, and really it's just news, right? It can be interpreted a number of different ways. We as humans will say, oh, well, this must be bad news, but look, literally Bitcoin, crypto, they're up higher than where the Sam Bankman-Fried fraud transpired. Now, we would all call that quote unquote bad news, right? But that's kind of missing the point in that it's bad news, but it actually created the bottom and we're up higher since then. So I don't mind calling it good or bad news. I'm perfectly fine with that because that's kind of the market. That's kind of saying here's how the public perceives it. The public perceives this as being bad news. But what happens when there's bad news and good price action? Well, you need to be aware of that. Or what happens when there's good news and really bad price action? You need to be aware of that. It's kind of the old buy the rumor, sell the news. It's the fact that a lot of times this stuff is already priced in. Okay, and what you think is quote unquote bad is not necessarily the case, right? And so if we kind of look at something here, let me give you an example of this. This is kind of a fun one. If I said to you, a company announced that they're going through bankruptcy protection, okay? Bankruptcy protection, basically saying, hey, we might be bankrupt. As a corporation, we got to go through bankruptcy protection proceedings and so on. Well, which category are you going to lump that into? Well, the general public and everyone else is going to say that's bad news, right? Just like fraud. Well, that's bad news, right? There's certain things that you're like, well, that sounds really bad. Here's Bed Bath & Beyond, and guess where they announced that they were going through bankruptcy protections? How about right here? So what happened? I mean, literally, they announced it, and the initial reaction is kind of what you'd expect. It plummeted, right? It got cut in half from $2 to $1.30. And what's it done since? It's quadrupled in price. It's gone from $1 to $4. How has it doubled since the announcement? I mean, literally, it's up 100% from where that was announced. How is that possible? Well, what do you think all this was, right? Just because you're hearing it for the first time does not mean that it's not well known and already being planned for and so on. This stock was already in a death spiral, headed down here towards, basically zeros. And the only reason this company is alive in the first place is because it became one of those meme stocks, one of those stocks that people tried to buy to pump higher and try to kind of screw people over type of thing, right? That's why it went from 5 to 30 right here in a week's time. It was like GameStop. If you've not read up on that whole scenario, what happened with GameStop and so on, you should. There's actually an interesting Netflix that you should watch about that. It's pretty interesting. Talks about kind of the mechanics of it and short inventory and so on. So there's a homework assignment for you. But the only reason it was at 30 was because it was, one of those meme stocks. And again, things can happen in the markets that are unrelated to fundamentals like that, right? That wasn't because the company all of a sudden was, 5 times better than it was a couple of weeks prior. Its revenues didn't go up by 5 times. Its earnings didn't go up by 5 times. They manipulated the market higher, and it started to deteriorate back down. And look, it's no real surprise to the markets that it has to go through bankruptcy protections. And so we're up, 4 times from that level. That's kind of something you have to be aware of, in that too many people think, well, a stock or a currency or this asset has to do this because this is good or this is bad. And that's just not the way it works. Crypto was already collapsing leading up to these problems. And so naturally, the final straw kind of being an exclamation point. That's what exhaustions are. If we just think about supply and demand, right? AKA buyers and sellers, at a certain point, one group will just become exhausted. Basically, there are no more of them left, right? Supply, sellers. This this asset, Bitcoin and these cryptos were collapsing. There just became a point on the Sam Bankman-Fried news, in fact, it pushed the final sellers off the ledge. The final seller said, I'm out. This is stupid. The fraud, get me out of this thing. And they were holding on and holding on and holding on. And then they finally got pushed over the edge. But there's simply some people that will not sell, right? And then if there's no one left to sell, if everyone that was kind of the last people on the ledge were pushed over, well, there's nobody left to sell, right? If you don't have any sellers left, there's only one place that this can go, and that's back up. So if you think about supply and demand, it kind of makes sense that something like Bed Bath & Beyond that's already collapsing, and then it makes this announcement for bankruptcy proceeding, whatever, bankruptcy protections, and it collapses further, that's it. Those are the final sellers that are willing to sell, and who else is left to sell? Everyone else says it's worth $1. If I own it, I'm not selling here. I'll just see what happens, right? And there's no sellers there, so any buying does what? Pushes it back up, and it goes from 1 to 4, even though it just announced basically it's a bankrupt company, and it made a loud announcement for everyone to hear, and that's how the markets work. So that's kind of the tricky nature of markets that you certainly have to be aware of. Don't think for a second that because the news, the public thinks something's good or bad, that it has to trade a certain way. A lot of times that's frankly where you get the exhaustion reversal. Philly Fed tomorrow, not expected to be anything too major. We've got retail sales out of the UK, but notice none of these are really highlighted as red. Retail sales out of Canada on Friday, existing home sales in the US. There are some Fed speakers, you'll notice speakers and ECB and Lagarde speaks for a couple of days there. But ultimately, it's kind of quiet the rest of the week. That's the reality of it. So let's come over and take a look at a couple of things here. And as per usual, just kind of want to click through some of the charts and look at some of these currency pairs together. Here's the US dollar versus all the other major currencies, and you can kind of see it just fell. This was where it was at the 104 levels on the dollar index. This is not the dollar index. This is our basket against the other currencies. Notice it went sideways and then broke down out of that. Now, you're probably reaching some sort of kind of exhaustion, and there was a quote-unquote bad news. Remember, the market perceived it as bad. What was the news this week? There was news out this week that Saudi Arabia will now do transactions. It used to be that they would trade oil and these commodities in US dollar terms. So when two countries wanted to transact, they would do it in dollars. Let's say that India wanted, some oil. They would have to trade out of their currency into US dollars, buy the oil. Then that country would collect the US dollars, convert it back to their own currency. And that was kind of the process, right? Or they would have petrodollars, what have you. It's basically US dollar backed. Saudi Arabia said, well, we'll accept euros and we'll accept, yuan, and we'll accept all these different currencies. And so that's bad news for US dollar. Again, some of these things are being factored in. And perhaps this is kind of that bad news, good price action, because notice the US dollar kind of pivoting off of this. This is the first time that we've really seen a longer lower shadow. since, maybe back in here. And by the way, it rallied for a few days there. Here should rally for a couple of days is kind of the indication. Long lower shadows are often at least a minor pivot low. So I would kind of think that that's the case. Japanese yen, also a long lower pivot. Let's remove some of these drawings here. This kind of speaks to the yen move that we talked about. Now, I sent out I was as cautious as I could possibly be on the yen down here, just saying, look, things have shifted in the markets and every central bank is raising rates, and the differential between central bank rates and even just their rates on government debt and so forth was just too extreme. And I had a pretty good sense, at least I believe, that the Bank of Japan was going to have to make some shifts. Even though they may not want to, they were going to essentially have to. And from there, the yen has gone up, of course. And I started to say even last year, I thought it was going to be the best currency going forward. I kind of wish that it had done these rallies in 2023. Then I would feel really confident that it was going to have that great year. Maybe it took some of the rally, so maybe it won't have as big a year, but I would still expect it to be higher throughout this year. So I'm in buy the dip mode, just buy the dips on yen. It sold off hard this week. I'd be more a buyer of the dip. And ultimately, you probably are going to get some sort of run higher and maybe some sort of exhaustion up here, at which point we won't keep buying the yen. But until that time, I still think you buy the dips. That's just my philosophy, my thesis. All right, Swiss franc in a big trading range, but a nice bounce back week. This week, again, later this year, I think we are in a tougher market environment. It would make sense to me that the Swiss franc should have a decent year as well. All right, let's look at a few others. The euro had a nice setup versus the US dollar. Whoops. Had a Bollinger Band buy setup a couple of weeks ago. Euro still just kind of trending higher. Little ascending triangle, right? Struggling at the resistance, rising support here. That's what the ascending triangle is. So the euro needs to hold here. If for some reason it can't hold at this trend line area here, then you got a big problem. But I'm going to give it the benefit of the doubt. I think it's probably an ascending triangle and will go up and out from there. The pound should continue to be kind of a sideways currency for a while. I don't really want to make an aggressive bet one way or the other. I would sort of lean towards being short the pound, assuming we don't break through here, but that's a tough one for me. CAD giving back, I had mentioned I'm bullish on oil, and oil is actually having a great start to the year. It's up 8% so far, and CAD's falling out of the sky. So I don't know. Could be, kind of related to real estate and other factors in Canada that just got overdone and bubbly, and a lot of problems there specific to Canada, but not great price action, and now making new multi-month lows. Not good. Aussie, big reversal off the highs this week, back into its range, and then Kiwi having a better week, but again falling off the highs. All of those are real risk-off type of moves. Just not great price action in CAD, in Aussie, and Kiwi. Personally, I would have expected them to have a good couple of weeks, and they just can't get it together. Now, I'm not finding, and I've mentioned this, I'm not finding as much correlation between kind of risk-taking in equities and it translating in the currency markets. I don't know, currencies I'm finding a hard time feeling as confident. I mean, I just feel like I've got equity market's under control and that it's doing what it should do at every turn. And then I turn and look at crypto or at the FX markets, and these currencies are all over the map, and it's just not really trading based off of kind of a risk on or risk off mode. Now, that's kind of indicative of a bear market. There's just more chaos, there's more things happening. There's, you know, there's not as much correlation that way when the market's bouncing but still in a bear market. So it sort of makes sense, but I don't know. The currency markets are a little tougher to trade right now, no doubt about it. If we come into a couple of currencies specifically, the euro has kind of pulled back and it's at those levels where it needs to hold. This was the setup that I was talking about where you had kind of a Bollinger Band buy setup here in Euro USD. Well, the flip side of that is kind of the pound. And so if I come over to the pound, let me pull it up this way and look at a few of these charts in the pound. I mean, this is it against the Kiwi, but let's just pull a few of these others. Here it is against the Aussie. Here it is against the CAD where it's kind of breaking out. Here it is against the US dollar, the Swiss franc, and the Japanese yen. So out of all of those, the Japanese yen, I mean, the currency that I'm most bullish on overall, it didn't perfectly meet the criteria because it didn't actually touch the upper band, but it's kind of the essence of it. Get up to an overbought condition, but in a downward trend. So you're below the 50, but didn't quite hit the upper band, so it wasn't quote unquote overbought. It didn't hit that 2 standard deviations above the level, but it was pretty darn close. And this is one that I'm trading to the downside. I think we get that push to the downside, but it's a tough one. I'm not kind of pounding the table on pound. I did this because actually the better setups that would have worked out, by the way, were the Aussie and Kiwi and CAD charts. But because I'm a little more risk on the markets, I kind of hesitated with this one. But look at Aussie. It actually did trigger, hit the upper band, still below the 50, and is working like a champ to the downside. So you had a bearish Bollinger Band setup on the Aussie yen pair. On the CAD, not quite. On the Kiwi, again, that one not quite, but the Aussie did trigger that setup. So I went ahead and traded pound instead of Aussie. I think that's questionable, but I did it more based off of my own personal kind of equities and risk on, and that might be a mistake, admittedly, because like I said, they're just not correlating and acting out as well. But either way, if you bought, well, if you shorted a yen pair, let's say it that way, everything fell off the highs. I mean, you could have done euro, you could have done Swiss franc, you could have done whatever, and they've fallen off the highs. Swiss franc again is acting pretty good and pretty strong, so give it a benefit of the doubt this week, I think. Coming back here for the rest of this week, we have how to measure volatility in the FX markets. That will be a recording that we'll send out tomorrow. We've got our currency recap tomorrow, and then of course this weekend we'll have our trading room that will be sent out as well. As always, hope you enjoyed this midweek. Have a great rest of your day, a great week ahead, and we will see you next week. Same time, same place. Goodbye, everyone.